Welcome to the London session on TopstepTV. If you're here for the first time, my name is Deeyana Angelo, aka Market Stalker D. I'm a Series 3 licensed trader. I'm looking at RBOB this morning for potential continuation downwards. We're going to see whether we get something in London. Now this is the daily chart, so obviously we've had a bit of a sell-off from the high that we made a few days ago, and there's not that much on the way to this demand around 206.23. It's a new contract, so it is a March contract now. But obviously London is not exactly the main session for this product, so we're going to see whether there's any traction going on. In the meantime, let's see who we've got here. So let me just go into the chat. Just a second. And just like yesterday, we still have the roofers in here, so there might be some banging and stuff, but hopefully it might... let's hope it's not too loud. So we've got Wes in here, we've got Alex LPA, we've got Yarden, Storm Soldiers, All Cash, we've got Yerzan, Lisa, Stifler, Brian, Teo, Trader Dan. RBs is asking RBOB what asset. It's gasoline futures. They are more liquid than crude oil is right now, so they have been my choice for trading NYMEX, but every so often you might get a move for London as well. Not every day, so again, this is not a high probability trade for this time of day. But I looked at gold, I looked at some of the other things, and I couldn't exactly see anything that looks better than RBOB. So this is why we're going to try this. If it doesn't work, it doesn't work, then I'm going to stop and wait for the NYMEX session. It is what it is. Obviously, I prefer to trade Dax and some of the more Euro-specific things that we don't yet have on Topstep. Yes, they are on the CME. It is a NYMEX product. So if you have a NYMEX exchange data feed, you should have RBOB as well. So yeah, but yeah, just be careful because it is a bigger, more liquid product, and it does move about 400 to 500 ticks per day. Therefore, we cannot be skimping on tiny little stops. So I like to use anywhere from 65 up to about 85 ticks for a stop. They are cheaper than crude oil. They are $4.20 compared to crude oil, which is $10 a tick. So those are some of the things you need to know. But it moves in a very similar way to crude oil. It's literally a twin, but it tends to be a little bit weaker on some of the days than crude oil. So if crude oil is going up, sometimes RBOB doesn't actually go with it because there is a differential between them. And there is a thing called the crack spread as well, which means you are effectively... Oh, hold on just a second. You're effectively trading a difference between three products traditionally in a crack spread, which would be crude oil, heating oil, and RBOB in a very particular ratio of those three products. Hold on, let me just get some stuff for my roofers here. They want donuts, they want coffee, and they want tea. Okay. All right, that should be on the way. So at some point, we're going to have somebody knocking on the door. And I have 4 dogs in here as well. I'll name this account later. Has a very good question. Good morning. Hope you're well. How do you identify if there is liquidity in the market? First and foremost, I look at the ranges intraday and also the volume. You know, you kind of can't trade contracts that have like, 2,000 contracts traded on the day. That's a very, very thin market. So really, ideally, you want to have something that trades at least 15,000 in a day, ideally 30,000 and above. Now, crude oil is very thick. If we go onto the CME website, and you go into the crude oil contract page, Going to quotes. And you will see that already March contract on crude oil overall is trading 262,000 contracts. So it means it's a pretty thick market. You know, there's a lot of people trading it, obviously. Now for RBOB is going to be a little bit less than that. Last time I looked. So it is you know, you look at the dome, it's going to be much thinner and gappy. But still, it trades about 25,000 contracts. Okay, so that is the difference between those two. Now, when we look at the dome between CL, actually, let's put them side by side so we can compare that. I do have level 2 data, and if you want to have the dome that looks like mine, which tends to be a frequently asked question, you would need to have level 2 data. You can find that in your billing section, and I do believe right now it's about $49, I believe. It used to be 39, but I think the price has changed just recently. All right, so if you look at how the dome is, you have on the crude oil on the right, you basically have contracts on every single price. 46, 15, 38, 66, 22, 17, 19. And then you look over here on RBOB and our Robert, as we lovingly call it, and you can see that there's 2, then a gap, then 1, 4, then another gap. My Pomeranian is deciding that she's a big watchdog, so just wanted to mute that while everybody was kicking off. She's still barking, the rest of them have settled, so yeah. Funny thing, eh? But yeah, look at how gappy the dome is. So be careful if you're in the live market and you're just going to try and execute a larger position. I'm just trading 1 here, so it's not a big deal. But if I were to go up to 5 or 10, I would have to be very careful where I'm entering, because every order needs to find a counterparty. If you can't find a counterparty, that is where slippage happens. Yesterday we had, during the inauguration, we had some people going, oh, what is wrong with the Topstep X platform? Like, my orders are not... It's like, there's nothing wrong with the Topstep X platform. This is what the markets look like. And if they cannot match your order with somebody else who's on the other side, there's no liquidity. So therefore, they have to wait until there is an order. And that can become a problem sometimes on slightly larger positions in gasoline futures, in our loving RBOB. Not so much in crude oil, because it tends to be a thicker market, especially during NYMEX. We will see about, you know, roughly about 20 to 40 contracts per price. So, you know, unless you're trading really large, it's not going to be, you know, that relevant, you know, unless you have to execute, you know, 100, 120 contracts in crude oil, you're not going to have a problem. But basically, one small guide of how to make sure that you're not in trouble if you're trading live is to make notes of how many contracts you actually have per price. And then if your position size goes over that, some extra thought and a bit of critical thinking before you enter might have to come into the whole plan. Obviously, that complicates things if you're still... Hey! That complicates things if you are still working on your strategies and you're not even sure what your setup looks like. And now suddenly you have to worry about where to enter. 7... All right, we're going to be hanging with 7. We call her 7 because we named her by the character from Star Trek Voyager, 7 of 9. But her full name is actually 7 Jerry Bear, again in honor of the actress that played 7 of 9, Jerry Ryan. So yeah, here we are. All right, so she's going to be here hanging with me because she's a little bit nervous. So, yeah. All right, let's have a look at more questions in here. While we wait for the paint to dry on RBOB during London. Let's see. So yeah, that's how you would identify the liquidity. So you basically can look at the volume traded, but you can also look at the DOM and see whether there are enough contracts. If you get any gaps and stuff, that means that the liquidity is a bit sketchy and you have to be a little bit more careful. Not so much if you're on XFAs and SIM accounts, because obviously they have, you know, it's a SIM account. Nothing is going out to the exchange. But as soon as you start trading live, then these sort of issues start cropping up, which is why it's also good to trade live, right? You wouldn't know of these issues if you're on a sim, even though they try to make it kind of pretty realistic, and there is order matching to a degree. But, you know, if I were to, you know, let's say go into my combine, and let's say I want to execute a 10 lot here, so just whacking a 10 lot short, it fills me like in literally like a nanosecond, right? There's no delay. There's no, oh, you know, it wasn't filled. But if I were to try that on my live, it would hang, especially if we're in an area where there are no orders, and then it would hang until it actually reaches a higher or lower price, depends on where they take it, and then it would do the order matching on the exchange. So it is a real exchange. It is a real, you know, it's a real market with real players, and it's, you know, everything becomes a little bit harder. All right, so let's have a look. Braz JL says, still fighting my drawdown from last time we spoke. I was in a 700 drawdown. Now I'm down $40. Excellent. So you're nearly out of it, right? You're down $40. It took me a week to recover. So I analyzed my trading and I lowered my DLL to 250. That is excellent work. That is super, super admirable. You're already doing better than most people. Sorry about that, loads of things happening today here. Yeah, so you're already doing amazingly well. So dragging yourself out of drawdown is probably one of the toughest things that you will do, and you're already doing well. So you said it took you a week to recover, but what's a week in the grand scheme of things? You're doing everything right, you're building valuable skills. Getting from minus 700 to minus 40 is a massive, massive achievement. So please, everyone, you know, if we could do the clap, you know, to go, yes, well done. You're basically nearly out of a drawdown, so just keep doing what you're doing. Make sure to keep on top of your mental capital. Don't let it drag you down. You know, do everything in your power to keep your self-discipline and your fight or flight response at bay, which means doing things like going to the gym, making sure you lift things before you trade, stepping away if you notice you're getting a bit annoyed, but you lowered your size. 8, you 3, enough. 7. Stop it. So yeah, so you're basically doing everything right. There's nothing else that I can tell you that will help. Slow and steady. That's the name of the game there. So well done. Okay. BC Drum says, I got level 2 yesterday. Not sure how to use it. Yeah, level 2 is one of those things where it takes time to takes 7. You're being annoying. Come here. 7. All watchdogs here, you know, many dogs, but they're fierce, fierce watchdogs. Okay, hopefully they'll settle now. Are we done? Okay. All right. So level 2 takes a bit of time. It is more discretionary than some of the other strategies because, it relies on more real-time information and on more like, oh, what do you see happening? So, for example, on crude oil, you can see there is a big order set lower down at 75.86. It says 226. Well, that indicates that there is some liquidity down there, and it's very likely that they might go and hunt that first before they do anything. Now, it doesn't happen all the time. Sometimes it's a case of the prices coming up to those levels and then running away from it. But for the most part, you will see an attempted move towards where the liquidity lies. That is what we mean when we say, oh, it's, are they going to do a stop run? And, usually they place these bigger orders below more significant areas intraday. So, for example, they're basically having the order right underneath the previous daily low. So not this one, 7, please. Can we not be so loud today? Thank you. So yeah, 75, 80, 89 or something. That was the low from this big bullish engulfing, and that represents the low of the demand area. So where do they have these orders? Well, guess what? They have it pretty much right there. So what that means is they're probably going to go and hunt through that, and then if they're going to reverse it, they might reverse it after they smash through that area. So that's one way to use level 2 data. Another way would be to perhaps use it as a in Bookmap you have smushed volume with the real-time orders coming through, which is basically a visual representation of time and sales. So that's another way to use it. So you see every single order going through, and some people like to look at that as a sentiment of where they're going to go. Now on Bookmap, I'm going to have to let 7 out because she's just too barky. So give me a second. All right, I only have the Cavalier in here. I am going to close this position because I don't like where it's going and it's too much drawdown. So we'll see whether they can re-engage around VWAP. This is your typical London where it doesn't really do much and then you get stuck in like a 50-tick range. So I'm not even sure I'm going to do another trade unless I see something else developing. But for now, let's just kill that and keep talking. So one of the problems with level 2 is that it takes a long time to figure things out, right? It's definitely discretionary. So what I usually say to people, try to record your screen with the level 2 data. Now, if you use Bookmap or just pure time and sales with the DOM, it's basically the same type of information. And it takes... it probably takes a couple of years to really figure out what's going on and to start making sense of it. Otherwise, it can be information overload. So if you're new to it, please don't think that suddenly you've got level 2 data and tomorrow you're going to become a wizard. It's going to take a significant amount of time before you can figure things out and actually use it to any sane level in your decision making. But is it useful? To me, yes, because I get to see behind what the market participants want to do. And it sometimes gives me a pretty clear view of where they're going to take it. But even for that, you still need movement, okay? I saw that somebody's asking for an update to Dax. So we can have a look at Dax today. Don't know whether I've got a good setup in there at all because we're opening inside value and smack in the middle of the range. So let's go to Dax Analysis now. This is a 4-hour chart. If I go up to the daily chart, You will see that they kind of just tried to sell off this morning, but then already there's some buyers stepping in, and all of this is happening around the low volume node, which can be your indication of a demand level that is sort of sitting there and waiting, and you can see it on the 4-hour chart better. So here's that demand level marked as a little gray box. And then we have a range, right? So this is now nothing more than a range. We have buyers that start turning up as soon as you dip into that demand. So the big line in the sand for me would be this area, right? So what do we want to do there? Right now we're sort of in the middle of the we're in the middle of the value area, which is a distribution curve from yesterday's London. So middle of the middle, away from any relevant highs and lows. But yeah, because this is an equity index and we still don't have any sort of a reversal on the daily chart, I would still be a little bit more inclined to a little bit more inclined. I just got a donut from my husband. So much for keto today, eh? Yeah. And yes. So I would like to see this fall somewhere to 21,020 at least. And if I look at what's going on the initial balance, you can see we're even at the initial balance middle. VWAP is pretty flat. So right now I'm not actually interested in DAX. If this changes throughout the day, obviously I will have a look. The algorithmic ranges are all much lower down and much higher up. So again, that's not helping either. And when it comes to any options activity, because we had a short day yesterday, I need to wait until we see what they're going to do intraday. But I don't really have many levels to look at just yet. If I had to make some kind of a guess or something, I would say longs, because that's an equity index, but the trade location is really crap here. So we don't want to get involved in areas where the trade location does not offer us the strength to actually go to the opposite side. He already had his bread, actually. But yeah, okay. Sorry about that. My cavalier needs to have his breakfast, and with all the kerfuffling this morning, I didn't do that. So now my husband is taking care of that. Yeah, so right now, hands off DAX. If anything changes, we get a movement below. That would give me a better risk profile to run some longs. If we go up to the top of that range from a 4-hour chart, I would be maybe looking to fade things. But again, I probably won't go for a double. I will probably go for the single because it is a short. And that tends to be a little bit trickier. All right, so let's try to see what this RBOB is doing again. Is there a range of any sort? No. So we have a bearish engulfing on a 30-minute chart. I'm going to show you that. And we are opening below value, which is why I'm trying to fish for these shorts here. But obviously I don't want too big of a drawdown. I want to have the position that pretty much goes into some sort of a profit nearly immediately. However, I will allow about a minus 0.6 or 0.7, depends on what I'm trading, of drawdown into a position. If it goes above that, it's time for me to cut that. So yeah, so far they seem to be trying again. So let's try that position again, maybe from a slightly higher area, 75 ticks. And because this is a pretty early attempt, and we do have that open below value, if the sellers do step in, this could be a very nice sort of sustained auction downwards, because we held the top of the initial balance and we're now trying to bounce. We're trying to bounce from this this little intraday supply that was created during the first hour of London. And again, London and crude oil and RBOB, they tend to be a bit slower. and then everything goes nuts. Whatever happens, if I'm still in this position by the time that NYMEX arrives, I will cut it. That is my time stop. I don't typically carry trades over from London through the overlap and then into the other session that has completely different players, completely different volume, and requires completely different sizes of stops and targets and a whole bunch of other things. So if I get some sort of a move, that will be the time stop. So it's either going to be the time stop or it's going to be the price stop. So either a target of some sort, whether it's a single or a double remains to be seen. But, you know, if I manage to get, you know, 75 ticks out of this, that would be okay for the London session for these products that don't typically do all that much until the overlap. Okay, then things liven up a little bit more. So we'll see. Sushim says, what do you think about longing platinum? I have removed platinum from my tradable instruments for this week because the volatility is completely gone down the drain. At least it was yesterday. But let me have a quick look for you on my other thing. Let's see if there's any movement there. So there is some movement today, mainly during Asia, and now they seem to be going the other way. But they're still below the initial balance, right? So they're just teasing initial balance right now, this red box area here. I don't like it when we have this sort of non-committal. We try to go to the initial balance, then we have some sellers, then we try to go again, then we have some more sellers, then we try to go again, then more sellers. I absolutely hate that sort of a introduction to the failed auction. I like to have a big decisive move for the failed auction, otherwise it is not a setup for me. So I'm still of the opinion that platinum for me looks not right for my style of trading. Again, it might be good for yours, but for me, this is not what I want to see, especially not after such a big trend down. Platinum is not one of those products that switches directions that often intraday. It usually picks a direction and then just keeps going. So because of that, it would mean me basically shorting the bottom because we have exhausted the algorithmic range and I don't have a good setup for long. So for me, platinum is a no today. But you know, if you're a scalper, if you're just kind of looking for a few ticks here and there, that might be okay. However, RBOB to me, especially from the daily chart, looks much, much better. And let's also have a look at the weekly chart. You know, to me, this looks like it has a better risk profile from the big bird's eye view, right? Whereas if I look at platinum on the daily, last time I looked at it, it fell quite a bit. So let's have a look at PL over here. Yeah, so look at that. Looks messy. It looks lackluster, doesn't have a trend of any sort. To me, this would be getting involved in the middle of the middle. So if I'm going to get involved, I would like to maybe look for longs around 9.15, because I know that was a level of interest before for certain institutional players. And we have this expanding range. We have this little megaphone formation. But it's still range, right? So if I'm to get involved anywhere in between from that larger time frame view, I don't have the support of the big institutional players because they're not going to be getting involved around these areas. So for me, I'm going to still say platinum is a no. But again, it's down to you, right? It's this is all for educational purposes only. I have my style of trading that suits me. If you see a good setup, don't take my word for it and don't, you know, just you do you, because you've got a different, we're all different people, right? We're different, we have different goals, different expectations of trade duration, you know. All right, let me go through the questions again to make sure I don't miss anyone. Hard way to trade. I like your name. On what instruments are you principally looking at gamma levels? On all instruments that have options activity, right? So for RBOB, we don't really, I mean, the options there, you have about 5 people trading gasoline futures options. But crude oil does. So what I do, I convert levels from crude oil options into RBOB, and then I use that. So you can always use correlated instruments to effectively convert things, and then use that as confluence. Now, obviously, I use the value areas and projected ranges for RBOB itself, but when it comes to options, I rely on converted crude oil options, calls, gamma walls, and puts, and then I look at how the price behaves around them. You know, it's still the same sort of game. Let me just go up to a slightly higher time frame. So we tried to go higher here, and last 15 minutes there was some pretty decent amount of selling here that is acting as a wall for now. So let's see if they, like, we do need to see some sort of a move from here. Otherwise it's still watching paint dry in a 100 tick range, which is not that big. It's like a fifth of the entire day's range, so we just are gonna have to be patient here. But yeah, principally, like I said, gamma levels should be done on instruments where there's quite a bit of options activity to make those levels pretty relevant. For example, YM Dow doesn't have options, right? But you can still use correlated products to find what Mentor Q refers to as the blind spots, and they work in a similar way. So you would basically convert it from a whole bunch of other things like ES, NQ, QQQs, SPY, and then effectively just look at whether the market participants are getting engaged in and around those areas too. So there's always a way to use the options activity to your advantage, and it's still only just an additional confluence. It's not the be all and end all. It's not some like big secret to, you know, great trading or whatever. It's just another level, and it's down to you how you're going to use those levels. If you don't have a very good, very well developed sense for price activity, if you don't recognize a mean reversion or a continuation, then you've got other things to worry about before you start looking at some of the more minute areas where, you know, market makers might get involved for a time. And then you kind of scalp a little bit. Now, some of the levels, they are bigger, right? Big calls and big puts, like if you have a lot of interest there, they can act as stopping points. That's why it's called the gamma wall, right? Because there's a stopping point where somebody said, okay, this is it. This is as far as we're going to go because there's so much volume here. We just cannot break through that. And then the price reverses from it. So there is that, of course. But again, it will depend on the amount of people that are using those levels as strike prices. Trader Shoab, am I reading that correctly? If I'm not, I do apologize. My chart that I was showing just a minute ago, that is my Blotech indicators ecosystem. At the moment, I'm using it on AMP MT5 futures because back in the day, I was a Forex trader, but then obviously AMP has real futures, and we've converted many moons ago, we've converted our things from MT4 to MT5, and now we're trying to convert them to Ninja as well. We're working on that this year. It's going pretty slowly so far. But yeah, this is Blotech ecosystem. I have Blotech market profile. These are the indicators I have. Blotech supply and demand. Blotech VWAP that also has settlement and the volatility bands inside it. It also has better volumes. It has the average daily ranges, which is my projected ranges for the day. Fisher transform, just a little bit of an oscillator for the larger time frames. Candle timer, which is free. So these countdown times that you can see there, that is actually a free indicator. And I like having it on all of my charts because I am not old. And, you know, they have timers. They have a timer on these charts as well, but I just always find it so tiny. And I never even think of looking at it. So I just need the candle timer to be right next to the candle for myself. And I asked my development team to create it for me, and they did. So thank you, Blatek developers. But yeah, so I do use execution platforms all over the place. I use NinjaTrader, I use TraderVate, I use TopstepX. So basically, I like to stay in touch and in tune with whatever the market gives me, or whatever the current platform is doing. And you know, I use TradingView as well. I just, you know, as somebody who comes from a tech background, I want to know how to use the most popular platforms so that I can help people a little bit better. But for my own charting, I keep it very consistent. I've been on the same platform for 18 years now. And the only difference was that we moved into futures markets. So back in 2013, when I got out of Forex and into futures, I still decided that I'm going to stay on MetaTrader as my main charting software. And I do have an account with AMP as well, but it is not under my name. It is actually an entity, and it is a part of one of my companies. So, and we do like mostly more automated things on there. It's not me just clicking buttons. I mean, I do have to execute a trade once the signals are all there, but the algorithm will tell us when there's a time for a swing trade, and we mainly do swing trading over there. Siwa says, good morning. Have you looked at platinum? Yes, I've looked at platinum. I'm not interested in it because I think there's more downside in it, and because we are in an area on the larger time frame that I'm not really happy about at the moment. So yeah, he said he was getting some cheesecake to go with my donuts since we're dumping keto today. Yes, and actually in light of that, let's have a bite of this little donut because I haven't eaten yet. I just had my coffee, and yeah, there's a lot of things going on, but because I'm gonna have a bit of a break. For the end of January from keto, because I feel like I'm not sleeping that great, and that means that your serotonin levels have gotten a little bit awkward. So I do knock myself out of keto for about 3 days every couple of months, and then I kind of reset my levels and get back to sleeping really soundly. So cheers. We can't really drink on YouTube, but we can eat cake, right? So there you go. All right, I'm going to have some Celsius to go along with it. That's pretty nice. Jam donut. All right, so let's see whether they can hold now this RBOB below the initial balance. Let me go on a 30-minute chart over this side. This is the initial balance here. The donut's going to be all in my teeth now. What's the time? We have about 20 minutes now before the next TPO finishes. But we're going to use the 15 minutes also to see whether there's some traction there. So yeah, not really interested in platinum, but I am interested in shorting RBOB because I think it's coming off the highs very nicely. Christopher says, we recently rolled over to a new contract in RBOB. Yes, that is correct. We are now in March contract, both in crude oil and in RBOB. But I think RBOB, they rolled a little bit early, especially on TSX, Topstep. Crude oil only rolled, I think, end of last week. So, yeah. Why do all of the traders on TopstepTV hide balance of accounts? Because it's somewhat of a private information, but it's also a matter of, some people like to drag down a lot of money and they don't have a super high balance. And we also don't want to focus on the balance of the account, but instead we want to focus on the process. So rather than you seeing some numbers that might be either unachievable or dreamland for most people, it's actually more healthy to just focus on the trade that we have at the moment. And you can see I don't even have P&L on my ticks here. I have ticks instead of dollars. Why? Because I don't want to see the dollars. I want to see ticks. Because that way, every trade that you do is actually the same. Doesn't matter whether I'm trading one contract or 100. It's still going to be the same number of ticks, right? If you start focusing on the P&L, that's actually the downfall of many people. And let's flip the other side. Let's say you're trading a micro contract, you're in a drawdown, you're trying to get out, and you're looking at your P&L. What's going to happen? You're going to be like, oh, I've got, 1,200 of drawdown. I need to get out of that. Oh, no, I've only made $30 on a micro. It's like, yeah, but how many ticks was that on that one micro? Because if you made 60 ticks or something and you're staring at $60, that's not necessarily going to do much for your drawdown, but it means that if you were trading with a full mini contract, that would have been like 600 in some of these products, right? So it's just a matter of focusing on the process over anything else, whatever balance somebody has is completely irrelevant if they can't manage their account properly. We've seen it many times on shoulder tap. You have people who start with, hundreds, 100,000 in their live account, and then very soon it's daily loss limit bonanza until we never see them again. So we don't want to be doing that. But focusing away from your P&L and not staring at how much balance somebody's got. I always think it's a bit of a weird flex to show, I've got this much balance in my account. It's like, does it really matter if the person who is actually trading is not doing a very good job? What does it matter what sort of a balance they've got? We want to focus on the setup, the process, and not X amount of money that somebody currently has in their prop account. But prop accounts are there to drag down money. So a lot of people, even if they might have dragged down, 100K over a year, they still might only maintain 10 grand in their account because they don't need much since they don't suffer too much of the drawdown, and 10K, 12K is all that they need for their live account. So then people are going to be asking, well, how come this person dragged down 100 grand but they've only got 12 grand of balance? I mean, really. And it's because they like doing payouts. They make money, they pay themselves out. They make money. They don't keep their money in their prop accounts necessarily. So, that's another reason not to focus too much on how much balance somebody has. Everybody has different financial goals, different financial situations, and, that will depend on how much money they're going to keep in a prop account. These are not personal brokerage accounts, You don't need to have an enormous amount of capital in there in order to absorb the buying power that the prop firm gives you, because it's the buying power on the back end that is decided by them, right? Whatever balance you have in there, that's the way prop firms work. It's usually shared in between one very large pool of cash underneath, and then you sort of just partial it into different accounts on the admin side, but still the leverage of those accounts does not impact the leverage of the entire prop firm account. So this is why you can trade larger than what you've got in your actual account balance at the time. Now, some people like to have a lot of cash in there. You've seen Dakota doesn't really take payouts that often. And he wants to build up his prop account to, you know, 1 million. And that's fine. You know, I did that when I first worked as a trader in the first 3 years as a prop trader from 2013 to 2015. And since then, I kind of realized that that maybe isn't the best for myself personally. So anytime there is any kind of cash in the form of XFAs or, you know, lives, I will drag it down. So I will never really have a super big, you know, amount of cash in this prop account. But, you know, I do have a fairly sizable company account away from, you know, prop firms and stuff. And that's been there for like 10 years now. So obviously we keep a certain amount of capital in there. And then every fiscal year we have to drag some of it down, you know, pay the tax the following year and all of that. So, you know, there are considerations for corporation tax, consideration for personal tax if you have a personal brokerage account, which can be quite expensive as soon as you get to any meaningful sums. And for me, I don't like doing that, so my personal brokerage account is like more of a YOLO account, with the main business account being more favorable tax-wise and, you know, a whole bunch of stuff, because corporation tax is less than personal tax, obviously. But yeah, so don't focus on the balance because that is not the important part. The important part is the process, position sizing, number of trades you do per day, how good you are in actually dragging yourselves out of drawdowns. How do you behave after a loss? That's a big superpower that you need to develop. So let's become mutants, X-Men that are not bothered by any losses. If you have a loss, wipe it from your brain. Make sure that it's controlled and it's not like, you know, a 10 lot position. If you only have like 10 grand in the account, or even worse, if you have 3 grand and you put in a 10 lot position, or even a 5 lot mini, that's just lunacy to me. But hey, it's it worked for some people, right? Unfortunately, then they don't stop and they keep doing that after getting lucky in one day. So yeah, so that's some of the reasons. You know, we want to focus on the process, not on the balance of any account. And even the live house account, we also started hiding that because people are like, oh, you know, you guys are drawdown. And in reality, you know, on some of the days when the house account would lose money because it's a large one, they were like, oh, you lost like 5 grand, ha ha ha. And that would be like the 10th of the daily loss limit that they had assigned, because it had like a 50K loss limit at one point. And I'm not saying that the process back then was perfect. We've gotten better since, and it's going to keep growing back. It's just maybe we did it a bit faster, and then people were a bit flabbergasted at the amount of cash that was being thrown around whilst we were learning how to do the committee trading side of things. But yeah, because of that, we decided to hide the house account balance as well, so that people are not freaked out. And we've decided to, you know, make it a little bit more realistic for some of the folk that are watching us, so that people are not having heart attacks when we go down into a drawdown of about 5 to 10%. Now, to put that in perspective, the house account on days when it would lose like 5, 10, 20K, out of a 50K drawdown loss limit for the day, that would be equal as you losing about 200 to 300 on a 2K drawdown in a 50K account. So now you tell me how many of you have done that before. Everybody's done that, right? You get a new XFA, first day, minus 200. Well, percentage-wise, it's the same, you know, it's the same kind of thing. But obviously we were trying something slightly different, and we managed to find a better way to manage that house account. And we kind of went back to sort of using community levels, but also following the traders that are on the program at that particular day. And I think it works much better that way, because you're basically backing the traders that are on, you know, they're on the on air at the time, rather than getting 1,000 different levels in your ear and then everybody getting a bit confused as to what's going on. Siwa says initial balance is the first 16 minutes of London, which is 3 to 4 a.m. EST. Yes, you're right. So 3 a.m. EST is indeed 8 a.m. GMT. That will shift a little bit in March when we do the stupid daylight savings thing. But it only lasts in March, I think, for about 3 weeks. So it's going to be a weird March again. But it happens every year. So, but yes, 3 to 4 a.m. Eastern is when the London initial balance is set. I don't trade before then, because I don't like sitting down and start to click buttons before I have a very good idea of what is going on. Are we going back to VWAP? Is the VWAP flat? Is it starting to slope? Do we have any sort of an initiative activity below or above the initial balance? So something that's going to tell me that we have other time frame participants stepping into the market, and that's not going to happen in the first hour for me, for the way I trade. So I prefer to wait until the initial balance is set, which is why I don't stream right at the open, because all that would be happening there is we would be watching the initial balance set, and I wouldn't be doing a single trade at a time. I do the same thing for NYMEX. I usually lock myself out between my 2 a.m. and 3 p.m. And then I will only start looking for trades for the NYMEX session from about 3 p.m. all the way through to the Euro close. And usually it's some sort of a reversal setup. Obviously not always, because, you know, if you have a big trending day and it's a Thursday, fishing for reversals is not really a good thing. Now, also something to note, today it is a Tuesday, and we do have these new bi-weekly options from the CME on crude oil that can bring the higher incidence of a trending day. So maybe today wouldn't be the day to fish for those intraday reversals, but just to try and go with the perceived move, especially if we only have the extension of the initial balance to one side. But likewise, I'm not going to be using crude oil probably, even though I did pop in a couple of crude oil trades yesterday, because nothing else was moving. I was watching the inauguration when YouTube decided to to kill the stream, and I saw crude oil reversing and kind of setting a range just before the close, and I thought to myself, well, this is actually pretty good, so let me pop in a long. And I managed to do 2 scalps, one long and one short from VWAP. We can actually maybe have a look at that. And that was basically it. I think I tried another long gold trade that didn't work. Later on after the London stream, it was post NY cut, so it was after my 3 p.m. I'm just trying to think of the times of day. But yeah, so this is what I was talking about. So we established the range, and in and around here, it was the inauguration. So I saw this happening, 30-minute chart. I was also staring at the lower chart as well, but you know, I saw this, and I'm like, they've established a range here. So let me just try and run. And it was such a slow day. I mean, apart from this, we were still stuck in a 70-tick range. It was so annoying again. But yeah, still, I managed to find one trade up to VWAP, and then we failed there. And I immediately popped in another one and got a very, very quick drop down. So that was my second trade. And that was literally, like, that was it. It was all done in like barely 30 minutes. Okay. Hi Dee, have you used Bookmap? Yes, I use it every single day. Ajaz, hi, good to see you. I got it over the weekend and studying it, but love how it visually prints out this historical dome. Yeah, that's a big positive for Bookmap, where it just keeps the heat map from the bigger orders. If they're still there, it just kind of stays there. And even when they go away, those orders still remain. So it will... I'm always afraid of blowing up my my memory here. I do need to get some more memory because it's getting a bit painful. So once we're in the new house, I need to do some upgrades to my computer. This computer is getting a bit old now. But yeah, let me just check what my CPU is doing here. See if I can maybe get Bookmap running, and if not, I'm gonna get that ready for tomorrow, so we can maybe talk about Bookmap a little bit more. But basically, it decides to they've decided to keep the heat map from the orders that were there prior. So even if we had, let's say, that big order, wherever it was, 75.86, that will stay, and then it removes it, but it stays historically almost as if it's another candlestick chart. So to me, it's so much better that it smushes together volume, time and sales, which is real-time orders, the size of the orders going through in the time and sales, which is historically very difficult to see because you have to remember them. It's like, oh, was that a big order? What's happening? It's extraordinarily hard to remember things, unless, like, I have photographic memory, so I don't have that much of a problem. But it just visualizes things in such a simplistic way, right? It's much better than just going trying to remember all the time and sales cancer that is in front of your eyes. So I love it. I use it every single day. I've been using it now probably for about 3 years, but because I already used the dome prior, it wasn't like a new thing for me. It was almost like a revelation. It's like, wow, I don't need to remember anything now. It's brilliant. So yeah, Ajaz, I totally agree with you. It's awesome. It's probably one of the best visualizations of the order flow in real time and the heat maps from the dome than I've seen to date. And that includes footprint charts, which I find, again, a bit tricky. Let's put it that. Niku Marion Boanda says you can change the chart plot alignment on the left and have a better view. I like my chart plot alignment. Again, 1,000 folks, 1,000 strokes. I like it this way. Some people might like it another way. Some people might like it different, maybe up and down. I like to have it like sort of more horizontal and like this. It's just, personal preference, but hey ho. All right, so we have about 1 minute until this TPO finishes. For now, it's doing well. We have gone underneath the initial balance. Gonna go back to RBOB here. And yeah, so let's see if we can get that full target. I'm not sure they're going to be reversing this until much later. If they do, so be it. But I am taking the risk on this fully. So I'm not going to be touching this. Instead, if I see that it really reverses, I will bail manually. But there will be no moving of stops. I absolutely despise moving stops unless you're doing scalps. This is not a scalp. This is a trade that is meant to last at least another hour. Maybe even another couple of hours, depending on how fast they decide to make a move, either side. But yeah, for now, we just wait for the end of that 30-minute TPO. And then we're going to have a move below the initial balance that was committed, and it got sustained below it. So unless they pull it up in the next sort of 10 seconds, we should be okay. And that signals a slower sustained auction down. So that would be one of the things that I look for in order to stay in on the trades a bit longer. All right, so new TPO, new 30-minute time frame being printed. And so far, they are below the initial balance. So all good for another 30 minutes. There's nothing else for me to do here. Do I have any thoughts on GC? Any thoughts on GC? Not this morning. I think it's a bit spiky, frankly. If I was looking at the daily charts, so let's just do this for for speed and efficiency while I monitor my existing trade. You can see that there's quite a lot of calls around 27.45, which was sort of like a pivotal area yesterday, and eventually they did run through that later on. But look at it today, like it's still causing some trouble. They only tried to go about 20 ticks above that, and they smashed it away again. So for me, this is too spiky. Again, too many wicks. What are these called? They are called long-legged dojis, I believe. And I don't like to see that on the chart. Like if I'm going to get involved in any sort of trading, I like to see like nice smooth candles without too many wicks. Too many wicks means too many intraday reversals and more dynamic way of trading. So until that changes, I'm not very interested in GC. So I didn't spend any sort of relevant time this morning looking at it. I just looked at the basics and I went, ew, and decided to move on to other things, right? So unfortunately, no thoughts on GC today, just yet. I mean, things might change, right? If they, they make a commitment, maybe short or something, maybe I will be like, okay, let's have a look at some setups. But right now it just looks a mess, complete mess. Did I miss a question? Let me see. So Hard Way to Trade says, I think ES is one of the hardest products to trade because of its efficiency. What do you think about it? I prefer a lot more crude oil and gold. Well, I obviously prefer the energies and metals myself. I am okay with ES. I don't think it's a hard product to trade. I think NQ is very hard to trade because it doesn't, like traditionally, doesn't respect levels. It wags through levels and then reclaims them by about 100 ticks on some days. And it's like, really? So I just don't like products that are too crazy. That's why I'm off GC as well, like I said just a minute ago. For the same reason, you have a perfectly good level and it smashes through it and then it reverses and you're like, the level is still there. But you're out of a trade because it decided to overshoot VWAP by 1 million ticks and then come back. So I don't like that sort of behavior personally. And even though crude oil can be a bit wicky, I still think that it actually wicks down to a level of interest, maybe bar like a few ticks through it, but it's not going to be like 50 or 100 ticks through it. And it always bounces off the levels that I have as a part of my strategy. So to me, I've actually caught some of the amazing bounces that happen in the flash of like blink of an eye because of headline risk. And it just goes to the call level or goes straight to the value high and then just bounces off of it. And it looks like I'm some kind of a, wizard or something. But it's just, crude oil respects levels a lot more. And it loves round numbers. So 72. So 72 even, 72.50, even like 0.75s can be of interest sometimes, but generally if I'm getting involved around a 0.75 or 0.25, I will try to get my stop over or under the round number or wherever that is. I don't like putting my stops above round numbers for longs and below round numbers for shorts, because I think that makes for a much weaker position. And if you plan on keeping the position for like 2-3 hours, that's not a strong position to be in on. It's okay to do a scalp and a momentum trade if that's that's sort of a trader you are. But if you're planning for a trade to last longer, some critical thinking over where you're going to put your stops and making sure to account for the stop runs as well. So not just, I'm just going to put my stop below the round number by a couple of ticks. No, consider that they will take the round number. Consider that they will overshoot the round number by a few ticks and then put your stop loss where it's going to be safe from that sort of activity. So then the only thing that's going to get you is if you're completely wrong on the trade, right? If they completely reverse it and completely go through it, sustain through it, and keep going. So the strength of stop placements is somewhat of an art form, but when you have a look at the penchant for the market makers to take the round numbers because they're the most logical numbers, then we can apply some sort of a systematic approach to that as well. Don't put your stops at round numbers. Very simple. Besides DAX, what other indices do you trade? I don't trade many indices. I'm not really a core indices trader. I'm a core energies and metals trader. Yes, DAX has been incredibly kind to me for the last 3-4 years, and I do love it. But I would still not say I'm an indices trader, right? I think there are way too many people out there who are core indices trader. I know that I'm not, because for me, DAX is pretty easy. I don't know why. Probably because it trends so much both ways. And once it decides on direction, like I don't even look at my DAX trades. I would decide on the trade and I'll go and walk my dogs. And then by the time I'm back, it's either hit the target or it's hit the stop. But most of the time it hits the target. And I actually have a reasonably high accuracy there. Like I have about 67% accuracy in DAX, which is pretty high considering I shoot for 2R, but not every trade is going to be a double depending on what's going on the day. So to me, it's more it's a smoother product. Like it's so drama free that I don't feel like it saps my mental capital as much as some of the other products, especially not during London, right? So whereas, some of these things like RBOB, you can't really walk away from it. You can't just like let it go and whatever. Like you have to like sit there and watch it. But at the same time, once it decides to make a move, whenever that is, usually around the overlap, it really moves, right? It really kind of just, it can do like 100 ticks in like 2 minutes flat. Easy. But yeah, I'm not a core indices trader, so I will pop in a trade in ES towards the end of the day. So power hour is usually when I like to do a trade. And over the years, I've done a few Dow trades, I've done a few Russell trades. But would I call myself, an equities trader? If I sit down to trade, do I first look at, at the equities? I don't. I effectively look at crude oil, I look at, gold, I look at platinum, I look at copper, I look at everything else apart from the equities. Because I have been trading crude oil since 2013, and the desk that I was learning how to trade crude oil, they did have equities traders, and they put me on an equities desk, but back in that day in 2013, ES was moving 12 to 16 ticks per day, for the entire day. That was your range. And I thought to myself, why do people trade this? This is like so odd. It's not moving. I might as well go and trade bonds if I'm going to trade this. And I didn't like it. I absolutely despised it. So they said, okay, maybe you like the more liquid products. Let's try you on crude oil. And back then, crude oil was moving like $400 in a day, like 350 ticks did I say $400? $4 in a day. So 350 ticks was the norm. And then a few days you would have 400, 420, 450. And then some of the quieter days were 250. So for me to see crude oil last year dry down to like 100 ticks, like $1 a day, me and Coach Hoop, if you see him on TopstepTV, we were like, what's going on with crude oil? Like, and we constantly, we're like chatting and he's going, Dee, where did they all go? And I was like, I don't know, bring them back. Because we all used to love trading crude oil, that was our main market. And now it's a very slow market, so we're all just scratching our heads. Whoever's been in the industry for a long time is like, what happened to crude oil? And, I had to focus much more attention to some of my other products that I didn't trade that much, like bar like a million trades. Crude oil, I have thousands and thousands of trades behind me, but at the same time you can't be still holding on to a product that's clearly dried out, right? There's no movement. And unless you're a scalper and unless you're very, very diligent with like sniping it from the tops and bottoms, which I absolutely hate. I'm one of those traders that likes to catch the middle of the move, right? So I don't really necessarily want to catch the bottom or the top, but once it turns around, I want to take the middle, and I want to take a good chunk of that middle, usually in the form of a mean reversion of some kind. But this is a continuation trade, for example, so I'm not going to fish for mean reversions today when there's like no mean reversion to be had. Maybe there will be one later, I don't know, but right now it's giving me a momentum trade, and it's a slower momentum trade. It's not like NASDAQ. But, I don't trade any other indices apart from, DAX and ES, and that's pretty much it. But ES, I'm not going to do every day. DAX, I trade a lot, but again, it's not going to be every day. If there's no setup, I'm not going to trade it. Like, the end, right? Hi, Dee, loosely related. Is there any way to get MBO data from Topstep Rhythmic? What is MBO? I don't know what MBO data is. Oh, right. Well, that is the level 2. Is that not level 2? That's market by order. Is that what you mean? I don't think so. I don't think you can just get level 2. Yeah, isn't this the same thing as like, this is DOM, right? Depth of book. Same thing. You have to go and get level 2 data from your billing. So MBO, I think you mean level 2 data. I mean, it has other things in it. So if you want, known Q position and all of that, I don't think they have that. So MBO obviously maybe is a little bit more than level 2. Yeah, but from the from the looks of it, yeah, from the looks of it, I think this is basically level 2. Yeah, so you can just sign up in your billing. So level 2 data is available on Rhythmic, but you have to pay for it. So if you want it on Rhythmic and on Topstep, in case you have both, I think you have to pay twice because it's a different platform, right? So a different data feed. So yeah. All right, let's move on. So I'm gonna hang with you guys for a little while longer while I wait for this trade to do its thing. Do I have a personal live account? I do, but it's more of a YOLO account. My main account is a company account from my company, where I don't just make decisions by myself. It is very kind of like half automated already, and all I'm doing is deciding whether to enter a trade or not. But it pretty much, I mean, we use my strategies for that and a whole bunch of things to come up with the trade ideas, and it's more of a swing trade account. It does hold trades for about 2 to 5 days, and it doesn't trade that often. So it's not going to be me sitting here clicking buttons on my own big accounts. It's going to be me seeing that something's saying, okay, time for a swing. Is there a course to enter this swing? And then it gives us the rough estimate of where stops should be as well. And then I decide whether to go in or not. So that is a very, very different way of trading than this sort of thing. I do have a personal YOLO account as well, where I am a little bit more aggressive. But I prefer to stick to the prop accounts now because that is more realistic than me pushing private brokerages in your face and going na 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 na. You know, most people cannot afford to have their personal accounts, right? This is why everybody goes to prop, and this is what we're trying to tell people, that you don't need to put in any personal capital. Like, if I didn't have to, I wouldn't have even put the initial amount of cash back in 2007. that I had if I could have just gone to an online prop firm and not spent any personal money, right? It's a harder way to do things. So yes, I do have it, but I did not have it for many years. I had my initial swing account, then I went prop, and I didn't open up my my own account until like 2018 or something crazy. I was just purely trading prop. I wasn't interested in it. Obviously, we had the company account, different venture. It was mainly there for algorithmic trading and stuff, but you know. And even that didn't start with like some ludicrous amount of money. I think it was 220 grand we started with. And then obviously that grew to 7 figures over time. But not in a year, right? It took a while. I'm not in favor of sizing up in order to get big positions very quickly. I prefer to allow time to do its thing. I prefer longevity over sizing up like a lunatic. But that's just me. Is Dax coming to Topstep? I don't know, man. I mean, I keep putting down this link. Nobody's voting for it. So you gotta do some work for me. So that's a Eurex post that I keep shoving in your faces for, well, since we started, really. Actually, no, it was probably like 3 or 4 months ago. So please, guys, go and log into that from various accounts. Tell your trading buddies. Tell your mom. Tell your dog to press Google account and then, let them sign up. Anything to bump up the votes so that they can push Eurex into the front of the queue. Until that happens, all that they keep doing is that we get closer to when they've announced that they should be having it, and then they just move it for another 3 months. And then they just keep moving it. So it's really difficult. Obviously, we have the whole Euro session here with Euro-specific products that are awesome to trade, and we still don't have access to it. So obviously, I'm using this as a class to, go over some setups. But you will notice that on most days, I don't actually have setups. So we sit here and we don't actually do any trading. We just talk about logistics of passing challenges, of getting out of drawdowns, and it's very useful. But, in order for me to do some committed trading, very rarely will I have a trade like this one, for example. Like, this is a good trade, right? It's fine. We're going down. Everything is turning around, no issues. It's not a drama trade. It's not watching paint dry exactly, but it's not really doing much either, right? We've kind of moved, but we haven't moved. It's sort of trickling downwards. It's not some super exciting event for us to go, wow, this is amazing TV. Whereas Dax is a little bit more, it can have days where it goes on runs of 200-300 ticks, and it usually happens in and around sort of like 9:30 all the way to midday, and then it settles down. Like, there are days when it still moves, like yesterday for the inauguration. I was actually short and I only managed to get 22 ticks, and then obviously I had to close the position because it was the end of the day. And I closed out my Topstep positions, and I closed out that one as well. And I thought, it's okay. And then it smacked back down, and it would have gotten me my full double, right? My full 2R. And I was like, damn it. But that's trading for you. So, yeah. All right, let's go through more questions. Sarah is here. Hi, Sarah. How do you trade Dax? I look for the breakout at market open. No, I do not look at breakout at market open. I actually love doing reversals after 11 a.m. my time. So that's one of the things. Especially if they're on the long side, like a long failed auction or post 11. That's like one of my favorite setups in Dax. And then I usually let it run for a couple of hours, and it generally gets the 2R, but I frequently manage to get even like 100 ticks out of it, and I typically use 35 ticks to get in on it. So basically that's like your almost full 3R multiples. It's crazy. But I don't really look for any breakouts in Dax, because breakouts, like any other market, they're not that frequent. You can have a trending day, and once it decides on direction, yeah, you can absolutely have it go in your favor. But very frequently, the breakout will fail, and it is a part of Frankie fake out. So it tries to go somewhere, and then but obviously, if you're looking for maybe not a breakout of a big level, but maybe a break of the opening range, is that what you're talking about? That could have merit. But again, that's a trade to last for the first 30 minutes or 60 minutes, and then it's done. And to me, that doesn't quite, the standard initial balance on Dax is between 50 and 70 ticks, depends on market liquidity. So to me, that's not enough, because by the time that I get my signal, that's already, 35 ticks or 50 ticks sometimes. And then it just doesn't offer me enough as an average range for that time of day to actually get involved, because I do want to get 70 to 100 ticks of space, including my stop, which means I can't quite catch it like that. But if you trade the breakout of like an opening range, and then you just snipe 40, 50 ticks out of it, or even 30 ticks, yeah, that can work. I just don't, I'm not that kind of a trader. I'm much calmer, and you know me, Sarah, by now. I hate scalping, so I only scalp if it's a range-bound day. And we have a good range, obviously. So yeah, but if that's what you're doing, doing the opening range, yeah, it's a good way to trade. What session times do I use for market profile on GC? I use what I call the modified COMEX. So basically, it's 1:30 p.m. GMT up to 2:30 p.m. That will be close to COMEX open. So COMEX open used to traditionally be at 120, which is 720 CST if you're over on the other side of the world. And then we didn't have platforms that would allow us to actually run anything at 20 minutes past. So you could do 0 or 30. Now you can do it, but over time they kind of agreed that they're going to make COMEX open at the bottom of the hour. So that's the time that we use. That's the time that Hogue uses. And I learned from Hogue, obviously. So that is 1:30 p.m. till 2:30 p.m. is COMEX initial balance. And then the regular trading hours are based on the old pit close, which is 6:30 p.m. for settlement in gold. Therefore, my entire market profile starts at 1:30 and ends at 6:30 p.m. Sometimes you want to maybe get that even into the electronic close if you notice that crude oil is in one of those times when it still moves a lot post-settlement. We have those times, right? Some days it really moves a lot. Other days it completely dies out. But every so often, you will come across a month where gold just doesn't stop. Like it slows down, but it doesn't stop. And it just kind of keeps going. At that point, you might want to consider not cutting it off at 6:30 p.m., but actually going all the way till 9 p.m. So again, some critical thinking there based on market behavior. Otherwise, use the former open pit hours. Let's see. How many trades do you take per day? Do you have a limit, or you take all the good trades? I do have a limit. If I go, generally my aim on the day when I'm super controlled is to do no more than 5, but really 3, especially if the first couple of trades go well and one of them hits 2R multiples. So if I get a double on the first or second trade, I will usually finish my day. I won't be looking for more. I'm not one of those traders that wants a prison of a different kind. You leave the 9 to 5 and then you lock yourself in front of a screen for 8 to 12 hours a day. I have no intention of doing that. If I've made my money on the day via my 1 or 2 trades, or even sometimes 1 trade, if 1 trade goes to 3R, I'm out. Like, you won't see me. Like, unless someone TopstepTV or something, I'm not going to be trading anymore. Like, I made my money. I'm done. I definitely use the limit. On the live accounts, unfortunately, we don't have a limit yet. You do have it on XFAs, but if I go into my risk settings, we have some very basic things. So you can have personal lockout, set lockout, and just risk and rewards in dollars. That is all that we have. So all the fancy things that you guys have got in your XFAs with your analytics and your number of trades per day and this, that still is not on the live servers. At some point it will be, but at the moment it isn't. So if I, for example, want to lock myself out just for 2 to 3 p.m. and to always have that, I have to call Mick or Brett up or Ben and go, hey guys, can you lock me up from 2 p.m. to 3 p.m. GMT? And then I'm going to trade after that. You cannot do it in the platform. You can lock yourself out generally, like with a manual lockout, but you can't set the actual period just yet in the live. And that's fine, it's okay. But when it comes to the number of trades, if it's not going well, and if I have a couple of paper cuts and then I'm like, oh, I'm $100 down, I will be very careful not to keep going, because I'll be like, okay, I'm not reading the market very well. Immediately go into the defensive mode rather than, I'm going to get you. I'm going to show you, Mr. Market, I know better. That doesn't work, right? So you have to control yourself. If you can't, then having some sort of a trade limit is a much better option than continuing to show the market who's boss. And if I, like for example, my example of overtrading, if I have nothing in regards to the limits, would be doing like 13 trades. And even after I do them, I'm like, wow, that was a lot of trading. What the hell am I doing? And I'm very quick to stop that behavior in myself. So already for the next session, the next day, I will be like, yesterday was not good. Today, I have to stop or not do any trades. So you will see me wait and wait for a perfect, absolutely perfect setup. If I don't get it, I will actually skip a day after my sort of overtrading moment. But again, overtrading, my style is not completely losing it and going on a rampage of like 100 trades or 50 trades or something crazy. It is always, whoa, I've tried like 5 times. What's going on? But if I can, I will limit myself to 3 trades. For example, I've had 1 trade here that didn't work out. Second one is working out. I'll be happy with this. I'm going to stop, right? Whatever this ends up being, 200, 350, that's fine. Like, I'm happy with that. It is a smaller account, and I don't care about the money. I care about the number of ticks I'm getting. This is a good trade. It's like right now it's 115 ticks of profit. If I get 180 ticks, I'm done. Like, come on. 180 ticks in a single trade. It's a good day, right? And the only thing that should differ will be your position sizing. So that's going to determine what P&L you have on the day, not, whether I'm up 50 or 50,000 or 24 grand or 1,000 or 500. I don't see it that way. I see the number of ticks only, and I don't care. Absolutely couldn't care less how much dollar amount that actually is. Maybe I'm weird that way, but there we go. So 3 to 5 is what I aim, but if I get my, double in a trade or 2, I'm done for the day. And I would advise you guys to do that as well. Now, I do have a little bit of news. I don't think we're going to be able to do the female group in the first try, unfortunately, purely because we didn't have the extra box to say, yes, I want to be on the female team. But we're going to try and do that in the second run because it goes in like 3-month cycles, doesn't it? So the first one is probably going to be a bit of a mix. So I need to think up another name, and we're going to be revealing that pretty soon. So it is going to be a mixed bag, but hopefully on the next try we're going to have an all-female team, and that would be great. What do you think about Dow respecting levels? I found it very nice to trade. Don't move like crazy, like Nasdaq. Yes, I agree. The Dow is a lot more respectful when it comes to levels. It is quick, kind of like Nasdaq, but not insane. And it does get up to a level if it's going to wick around it, it's going to wick near the level that you have. It will touch VWAP or maybe just overshoot it by maybe 10 ticks or so and then react, or completely go through it, right? And yet, you know, NASDAQ and Q is completely insane. It's like VWAP. Yes, we reacted off VWAP. What happened? It overshot by 150 ticks. Brilliant. It's a great trade. But Dow doesn't do that, right? Dow is really quite... you know, it's dynamic. It's certainly a dynamic instrument, but it respects levels. So I absolutely agree with you there, Sushim. Let's take a couple more questions, then I'm going to go. Polaris Minora says, do you use the market by order add-on with your Bookmap? I just have regular level 2. To be honest, Polaris, I've never really looked into market by order, MBO. So no, I just use the level 2 that they provide, and yeah, I don't, you know, I don't go that deep into like, oh, what is the positioning and what is the queued orders and what is this? You can kind of see everything, or at least I can see what I need to see for my style of trading on a regular level 2, right? So, for example, crude oil. You know, there was a big order down around 75 something. I see that they've already smashed through that. So that was the expected move, that we're going to move lower. Nothing else serves much purpose. I'm like, oh yeah, whatever. What else can I derive from it? Nothing. We're below the initial balance. We still have all, you know, down candles. Are we coming into any relevant levels? Well, maybe. Yeah, but not until we hit 210, or at least 210.50. Somebody asked, what's my target based on? Usually it will be a projected move based on previous day's movement. So it's either going to be ADR or average session, range ASR. And that is usually where you will see my targets for sustained auctions. Now, I have quite a few setups for different market states after 18 years of doing this. But for the sustained auction, it's very simple. We're looking for a full projected move through the algorithmic ranges, either taken from the volatility of, you know, previous day or previous 10 to 14 days. But I have used the smoothed out version where you look at the previous 40 days and you use that as a level. However, today I have two things around 210. So we have ADR low at just sub 211. And then I have the put support from a couple of days ago that was an interesting level at 210. And then I also have a projected move exactly at 210 for RBOB. I do have some other levels further down that would be more conducive to a continuation of the swing up, but we won't get into those until, in my opinion, we get sub 205 on RBOB. So until then, I'm probably not going to be looking for any swings. It's all going to be intraday stuff. But yeah, we're slowly coming into the target area, and because I'm going to be out of the stream, I might just kill this and take profits with the, you know, the opinion that I've gotten most of the move out, and I'm almost at 150 ticks here. Well, actually, it's gone over now. So let's just end the stream by taking this and ending the day 469 up in our live Topstep account. And I'm actually going to lock myself out because I don't want to trade anymore today. I am going to be on Topstep later on. But, you know, usually we trade equities and stuff. I've already made what I wanted to make from this. So I am going to lock myself out. There we go. Lock me out. And that's done. So I'm going to finish the stream here. Thank you so much for being with me. That was a pretty pain-free RBOB trade. We got, Mr. Market on our side, where we got quite a bit of movement. during London session. So yay. Slow clap. Let's expect Dax in the meantime, so at some point in the future. If you are looking to trade on TopstepTV live with us, obviously fill out the casting call, because I would like to meet some of you face to face, right? So fill out that form. If you're looking for more help, more coaches, more trading buddies, our Discord has now grown to over 100,000 people. So make sure to go into Discord, and it's great. Oh, Anne-Marie is here. Oh my God, I didn't see you. Oh, I have to answer this question, obviously. Is there a place where you would move your stop and keep the trade on? Yeah, so if I'm doing more of a scalpy type trade and I'm expecting a quick move away from it, I would move my stop, because I don't want to lose a lot in case the scalp doesn't go my way. I'm not a core scalper, so definitely I'm a little bit careful and wary of how I'm entering positions. So in that regard, I will rather end up in a break-even trade than a loss, clearly. There's also a time if I'm in multiple positions, which for this particular account I'm still not doing. But basically, if I'm, let's say, in a 6-lot position, I will actually move 3 lots into break even and then leave the rest of it to have the original stop loss. So that way, even if I get stopped out, I will still minimize a little bit of the downside while still maintaining the 3 lots upside. I've actually shown something like that, I think a couple of months ago, where I was also partialing the stop loss in the middle at the point of my maximum adverse excursion. So I would look at what my MAE is, and then I would add about 4, and that kind of becomes my partial. And that becomes the one that I drag into profit sometimes. But generally, if I'm pretty sure about the setup, I would just let it play out, especially if I'm in with a reasonable size that is not really going to make a massive dent in the account. It's just one of those things where I accept the risk and I'm absolutely okay with that. So hopefully that makes sense. But that's always a great question. I'm so glad to see you here, Anne-Marie. Hopefully we'll see each other on TopstepTV as well. Braz JL, I don't like the break-even stops on some of my longer trades, because I feel that over time, all it's done is just limited my upside. I'm pretty good at figuring out whether there is a larger trade there. So I would rather commit to the trade and go, well, if it doesn't work, I can always take it off early, right? If it does work, I've got nothing else to do to it, right? I don't want to... We talked about stop-loss placements earlier in this session. I feel that whenever I move my stop to break even, especially if it's a full stop rather than just a partial position, I am jeopardizing the stop placement that was there for some reason. So unless I have a very big move away and I can't watch it, like, for example, if I'm in on Dax and I plan to hold it up until 100 takes profit, but I have to leave my house and I can't watch it actively, I will move the stop to break even if I'm in profit of about 50 ticks. Anything before then, I feel that it just comes back to my entry, knocks me out, and then goes to a 100 tick target. And to me, that's much worse than actually losing a trade. Maybe I'm okay with risks that I take, and that's why I'm not that bothered losing a trade. But yeah, to me, it would be like knife in the chest, right? If I'm right on the trade, but it knocks me out at break even because I moved the stop to BE and then it carries on. It kills me, man. Absolutely kills me. But, maybe I'm different that way. All right. Thank you so much for being with me. I'm going to end it here. I will see you later. I will be on at 1 p.m. Central, which is 7 p.m. our time, for one of the rotating segments today. So until then, let's see what the day brings. This is post-inauguration. It's probably going to be quite interesting. Isn't it day 1 of Trump presidency? So, yeah, exciting times, exciting year. Let's go. This is TopstepTV London session. I'm Marcus Dee. Take care.